Joining us right now, first on CNBC is Starbucks' CFO, Rachel Rogeri. Good morning to you. Bit of a mixed picture. The stock is off this morning, I think really off the expectations of the reopened trade, if you will, for China and it not happening. But I'm curious sort of how you see the China piece of this relative to the rest of the business.
So when we look at China, as you saw, we had headwinds in Q1, and we expect that will continue into Q2. And that's largely driven by the fact that even though we're starting to see some signs of recovery, which is encouraging, there's still a lot of headwinds in the market related to COVID. And so as a result, we expect the back half of the year to be stronger than the first couple quarters. And that's what we've guided. But we have a lot of confidence in what we're seeing, because when you look at our international business, excluding China, we grew 25% in the quarter. And that's largely driven by recovery. We have double-digit comps in markets like Japan, in markets like UK. And that just speaks to the strength of recovery. So we have every confidence that the headwinds we're seeing in China today will lead to tailwinds. And that's what gave us the ability to be able to reaffirm our guidance on a full year basis, but also gives us a lot of confidence in the growth that we've outlined for the years to come.
Can you speak to just the strength of the consumer? I mean, you look at some of the numbers in the U.S. of 10%. A lot of it's not necessarily more people are coming to the stores, though that is part of it. It's actually that people are just spending more, and whether you think that's going to persist.
Well, it's actually a combination of both. We do actually have more customers coming into our stores. We're up 10% versus prior year. We have a record number of customers coming into the store. They're not coming as frequently, but more customers are coming in, and they're spending more when they come in. And that is evidenced in our ticket, which was an all-time high in the U.S. this quarter. Now, that's a combination of pricing, but it's also reflection of the highest attach. So food attach was another high. So strong food attach, continued attach with beverage, but it also reflects the personalization that we have. Increases, like we saw an increase in customization as an example, up 28%. So it's our customers choosing beverages that are best for them and that work for them. The combination of all of that is leading to a higher ticket. And what we're encouraged by is that led to the highest sales that we've ever seen in the U.S. business on a weekly basis. 8 of our 10 highest sales days ever came in the quarter, with our Red Cup giveaway being the highest ever. So we're encouraged by what we're seing. And as long as we continue to create value for our customers in that experience, we think, it supports growth over the long term.
And well, the reason I asked about the strength of the consumer, we're hearing that, Walmart is seeing, and Amazon is seeing, and others are seeing that, someone who might have been prepared, a very affluent person who might have been prepared to buy an 85-inch TV is now buying a 75-inch TV. But the opposite seems to be happening in your stores. And that's what I'm trying to understand what you think is happening.
Sure. Definitely we understand, and we're cognizant of the fact that our consumers, our customers are facing many challenges in terms of the economy, inflationary pressures, employment pressures, things of that nature. So we recognize that that's a reality. But we have not seen an actual issue with our demand. Our customers aren't trading down. We're seeing them continuing to spend more. And we believe part of that is the fact that, it is in some ways an affordable luxury. It's a routinized behavior. And as long as we can continue to create that value through the experience, whether it be through unique offerings that you can't get any other place, you can't make them at home, as well as different channels to be able to connect with us, we think that that's what's part of what's driving it. And we see it not only in the U.S., but we see it globally, which is encouraging.